Investors are dancing on a knife edge. One sudden loss of faith in AI hype or a wobble in the Fed's credibility, and the party could end in a stampede. The Bank of England's warning, what it really means. The Bank of England, BOE, has sounded a clear and unusual alarm. Risky asset prices, especially in U.S. tech names riding the AI wave, look stretched and vulnerable to a sharp correction. The Financial Policy Committee, FPC, says those stretched valuations, combined with fragilities in market-based finance, could interact to amplify market stress and choke off credit to households and businesses. Why AI euphoria raises systemic risk. AI has become the magnet for capital. Mega-cap tech shares have run up to valuations that, in some measures, echo the dot-com boom, and much of the market's gains have been concentrated in a handful of names. That concentration matters. When performance is driven by a few players, any reversal in their fortunes can ripple far beyond a single sector. The BOE notes that if investor confidence in AI's transformational promise weakens, prices could reprice quickly and sharply. The Fed connection, credibility is financial plumbing. The BOE also flagged the risk of a loss of confidence in the U.S. Federal Reserve. The global financial system trades on expectations about central bank policy. If markets start doubting the Fed's ability or willingness to respond credibly to shocks, risk premia can jump, dollar-linked assets can repricing fast, and cross-border funding strains can flare. In short, a credibility shock to the Fed could turn a U.S.-centered sell-off into a global event. Market-based finance, the hidden amplifier. Since the global financial crisis, a larger share of credit and leverage sits outside traditional banks. In hedge funds, prime broker networks, ETFs, and shadow lenders. The BOE warns that when risky asset values fall, these market-based structures can transmit losses quickly through margin calls, fire sales, and liquidity squeezes, worsening the initial shock. Recent episodes of margin pressure in parts of the credit market show how fragile this plumbing can be. The BOE is not predicting a crash tomorrow. Rather, it's raising the probability that a sharp correction could happen if the right triggers occur. The bank still sees strengths in parts of the UK financial system, healthier household balance sheets and fairly resilient banks, but warns those positives may not insulate the economy if market-based finance and risky assets move together in a disorderly way. Investors. Trim concentration risk. Reassess assumptions that large tech winners will continue to outpace fundamentals forever. Stress test portfolios for scenarios where AI optimism cools or rate cut hopes fade. Policymakers, regulators, monitor leverage and liquidity in market-based finance and consider buffers where systemic risk is building. The BOE's stance, keeping macroprudential tools calibrated, reflects that approach. Market participants, prepare for higher volatility. Herding driven by similar AI models or algorithmic strategies can make downturns steeper. Diversity of strategy matters more than ever. A balanced view, not doom, but vigilance. AI is real and will bring productivity gains over time. Likewise, central banks remain vigilant and equipped with tools. But history shows markets can overlook tail risks for long stretches, only to reprice fast when expectations shift. The BOE's message is simple. The combination of lofty AI-driven valuations, concentrated market leadership, and vulnerabilities in market-based finance raises the odds of a sudden correction. Investors who behave as if nothing can go wrong may be caught off guard. Final takeaway: treat the rally like fragile glass. Enjoy the gains, but don't assume they're indestructible. Diversify, de-risk where necessary, and remember that market confidence in technology narratives and in central banks is a fragile commodity. When confidence cracks, corrections can be fast and large. The BOE's warning is a reminder that prudence sometimes matters more than pace.